So this is our 2025 home runs list. This is the first one. So it's a series of videos. This one's on Celsius. Celsius is a company which we believe will do very, very well in 2025. And if you buy today's levels, this video being recorded November 26th, you should make a good bit of money. That's what we're doing. We bought today. We've been buying. But before we really start, note that it's not actual investment advice. Do your own due diligence. Do not randomly buy a stock because a YouTuber is proclaiming the stock. It's a bad idea. This presentation will give you some ammunition as to maybe why to buy a stock, but there is no actual buy recommendation from us, so we're not providing investment advice to buy said equity. Company overview. So really quick, if you've never heard of Celsius before, Celsius is another energy drink company. So think of Red Bull, Monster, whatever. Now, unique to Celsius, usually when you think of energy drinks, you think of like a big contractor, big dude, pound down monsters. Well, not so much of Celsius. Celsius is kind of marketed to everybody, particularly for athletes and burning fat. The website goes into numerous case studies from different colleges on scenarios of both working out and taking Celsius and actually having weight loss. So their commercials are very, very women centric, which really has Celsius kind of a league of its own when it comes to particularly marketing to women. Called big things: no high fructose corn syrup, no aspartame, no artificial preservatives. These are no-nos. And overall metabolism, caloric burn rate, and pre-workout effectivity all are improved and all are shown with case studies on their website as to why they're so strongly behind their product. Now, when it came to the last quarter of the income statement, it's pretty terrible. It's not very good. They had a very bad quarter because Pepsi in previous quarters bought too much, and thus this last quarter toned down their buy order. Because Celsius uses a distributor model. If the distributor, in this case Pepsi, does not buy enough, they have a bad quarter. Now, all in all, real dumpster fire. So revenue down 31%. That's pretty terrible. Cost of revenue was down, but doesn't matter because overall revenue was down so much. Gross profit 122 million over to go to 209. I mean, I can go down all these. Dumpster fire. Operating expense goes up a quarter. You make less money. Not very good. So all this has really contributed to Celsius stock price being very low right now. However, we do believe this is just a one-time bad quarter. Now, it's worth mentioning the balance sheet, very strong. Beautiful balance sheet. Got plenty of cash. Even for a bad quarter, they more or less just stay the same cash-wise of 903 million cash on hand. But look at the debt. Almost no debt. Debt is very annoying when you're buying a company. So look at this kind of company, debt of 289K, that's nothing. Nothing at all. So basically no debt, beautiful, beautiful balance sheet. If I am going to invest in the company, I want to see very little debt and a nice balance sheet. A bad quarter on income statement is easy to work with, but a company with a disastrous balance sheet is not a good investment usually. Now, going into that one-time bad Pepsi quarter, a couple of things here. So, on the positive, year-to-date revenue was still surpassed $1 billion for a 5% increase. So, even the bad quarter, overall year-over-year revenue has been increasing. What's interesting in the Pepsi scenario is Pepsi has an 8.5% stock stake in Celsius. So, obviously, in this case, Pepsi wants Celsius to do well. So, we have one quarter we have to adjust for previous overstocking. But what I have seen in my research is The overstocking dilemma is over, and Pepsi is back to buying Celsius in smart, intelligent quantities quarter after quarter. So this last quarter was mostly a one-time glitch. Now, a couple important things that are nice for investing in Celsius. So this year we had 6 new countries join Celsius, so they started drinking Celsius products, and a whopping 37% international sales growth. That's very good. Now, they purchased a company called Big Beverages. Big Beverages is important because it allows them to have further manufacturing capability, and with the increased manufacturing, they can actually have limited time order products. So you want to have a nice Christmas product, you kind of have to be able to scale for that Christmas product, which they can now. Right now, the third most popular energy drink out there, Red Bull is number one, but they're trying to aim to beat Red Bull out. Once again, even with a bad quarter, you still have retail sales grow 7%. So we're still trending in the right direction. And they're committed to innovation with 6 new drink flavors this year. Now, Celsius is doing very, very well when you consider Celsius relative to the other drink names out there. So if you look at the growth for Celsius between 2020 up to 2024. So, 2020, you're looking at, okay, very measly 14 cents, and this is really with billions. So retail sales across tracked channels. But look at 2024 and 2023. So they have massively increased their overall sales. And more impressively, if you look at the bar graphs to the right, that shows how Celsius is improving relative to the overall industry. So for 2024, 37.2% of all growth in energy drinks became from Celsius. So Celsius is a monster in this sector. Now, this one kind of does a better job of comparing the other drink companies. Now, what do we see in 2024? Well, Celsius still increased its actual growth. Very important. So they're still selling more, while Red Bull went down, Monster went down. Alani is another newer kind of energy drink player, but there's a lot smaller, and Rockstar went way down. So overall, Celsius is really, really capturing the growth engine for this sector. Which is why I've been interested in buying, and I believe I will get a very nice return next year. Now, revenue EPS. So if you look at the earnings per share, you see, once again, they had that one negative quarter. And that was kind of expected because they were able to adjust that EPS once they found out more about the Pepsi situation. But now we're going to be trending back in the correct direction, and I do believe we will have quarter after quarter of actual earnings per share be above the estimate. Income statement, pretty good. So you can see for total revenue, each year they're still doing well. Even this year, 1.32 billion, they're going to do way better for FY 2024. Don't be surprised if FY 2024 hits the 1.8 to 2 billion mark. Very good. They're making a lot of money on that top line. And when you're a growth stock, I care more of the top line than the bottom line. They're going to have overall EPS growth 35% roughly next year. So obviously the bottom line is also doing very well next year. But when you growth stock, the biggest thing is increasing that revenue growth, which Celsius is doing pretty well. So Zacks is my favorite website for getting all the analytics on a company. So with Zacks, I really care about how we're going to improve sales. So right now, Zacks estimate, we're looking at a 1.58 billion for next year. Pretty good. I think it can go real crazy. Gave me 1.8. They're saying the highest is 1.7, but you'll see. I'm pretty confident of Celsius, and obviously at 1.7, maybe 1.58 billion, that's still pretty dang good. So they are growing where they need to be. It's very important. Now, likewise, with revenue sales, you have overall earnings. So current year EPS 0.69, not very good. But next year 0.93. So this represents that 34% EPS growth I talked about earlier. So once again, Celsius is trending in the right direction. And if you are of the investing mindset, it is very nice buying a stock when it's a little troubled, kind of low, get a good discount on it. And that is where we believe Celsius is at right now. It's a nice discounted stock that should pay quite a bit down the road. So last little stock slide here. These are the analyst price targets. I don't put too much weight in here, but I like buying the stock right now. I'm saying that low is roughly $25, and that $25 to $28 range is a very good consolidation range to buy. We hold the stock right now. Right now, PE ratio about 42, 43, but if we have that 34% EPS growth, which I believe we will, and you see Celsius everywhere, I do believe that the same time next year, you could be looking around $50. But certainly, I would say that average of 42 to 50 is where we're looking at for this stock. So nice, pretty easy stock. Even if you're at 42%, 42, the good news there, you're making a pretty nice return. So if you buy at 26, you sell at 42, there you go. That is a perfectly good money return there. So you really can't complain about, what's that, like 80% return? Pretty dang good. So that's our game. Obviously, do your own due diligence, research yourself. But we personally do like Celsius, and we'll be buying more of it and selling for a pretty nice profit next year. Obviously, you buy at 25, you sell at 50, then that's a good 100% return, which is very possible. So happy trading, happy investing. See you guys later.